And now, welcome to Chai with Manju, with your host, Dr. Manju Sheth.
Welcome to this special edition of Chai with Manju called COVID Diaries. This pandemic has taken a huge toll on our health as well as wealth with job losses and stock market decline. So, on that note, I'm delighted to welcome our special guest today. He's one of the best financial advisors in America and has been consistently featured in the most reputable authorities like Forbes, Barron's, as well as Financial Times. He runs the Sharma Group and is the managing director at Merrill Lynch and oversees over $10 billion in assets for his clients. Let's welcome one and only Mr. Raj Sharma. Raj, welcome to the show and tell me, what have the last few months of pandemic been like for you and what is the biggest lesson that you have learned?
Manju, first of all, thank you for having me on your show. You produce a terrific program with so many great insights for people. I appreciate you calling me on the show. The last few months have been a lesson in humility, that you cannot expect the world to sort of operate like clockwork. Things can happen. And they say the only constant in life is change. And that's certainly what we saw. And so certainly from an economic perspective, from a human perspective, and a financial perspective, it's been a pretty stressful time for the world economy. But I think it's important to look at this from a different perspective, to take a slightly longer term view. So that would be my takeaway from all this.
Okay. So, as we've said before, so many people have lost their jobs, their savings, so much of their retirement savings, even up to 30% people have lost. Do you think we are heading towards a recession?
We are in a recession technically, but we're not heading towards a depression.
Okay.
This pandemic happened at a time when the US economy was firing in all cylinders.
Okay.
Unemployment was 3%. We were growing at about 2% a year. Interest rates were down. And the trade war had just ended, if you recall. And the global economy was just starting to pick up. So this is a self-induced coma where you shut the economy off for a few months. And my sense is when anybody recovers from a coma, I don't know many people who have, some people have, I'm sure the world is not the same. And it's going to take time for us to recover back to 100%. It's going to happen in the next few years, but not immediately. So I have confidence that the amount of fiscal and monetary stimulus we have injected into the economy, Manju, is unprecedented. It's equivalent to 35% of our GDP.
Wow.
35%,
Wow.
about $7.5 trillion.
Wow.
Versus a GDP of about 20 trillion.
Wow. Now, you have always emphasized that the investors should have different kind of buckets for their savings. Now, what would be your advice, or what should be the strategy for people to allocate their savings in these uncertain times?
Absolutely. I mean, the way I see it is, when you invest money, you want to sleep well at night.
Right.
And you'll only sleep at night, if you allocate your money properly. So I've always believed in the 4 buckets. The first bucket I would call your safe money, which is typically, let's say, 1 to 2 years of savings or your cash flow expenses.
Right.
So if you're spending $100,000 a year, perhaps it would have 150, 200,000 in some place safe, which doesn't go up and down.
Okay.
The second bucket is what I call a conservative income bucket. This is like real estate income. So this is investing in bonds, in perhaps in real estate for income, perhaps in dividend-paying stocks, but generally more conservative investments which are producing cash flow.
Right.
And that I call my fixed income proxy bucket. My third bucket is my 8-cylinder bucket. This is my global equity investing in emerging markets and small cap and large cap. And that's where I'm going to build up my wealth over the long term, where I can get an 8 to 9% rate. And the fourth bucket, and many of your listeners are entrepreneurs, is your aspirational bucket. You may have started your company, where you may have your company stock, your private equity investment, your venture capital investment, which can be your 10 bagger or your 20 bagger. And so you want to allocate it properly so that you're comfortable with it. And for equity investing, my advice to investors is if you have anything less than 5 years as your time horizon, you should not be in stocks.
Really? Can you explain that a little bit more?
Meaning, I found if you are in stocks for over 5 years, in any time period in history, over 125 years, your chances of a positive return are like 95%.
Okay.
If you have a 1 year horizon, you may still succeed. Your chances are probably about 55%. So your chances go up as the amount of time goes up.
Okay.
And that's always been the nature of equity investing. You don't want just luck, getting in at the right time. Right. You want equities to work for you. And with equities, you're really investing in companies. You don't want to look at it as speculative. You're investing in Johnson & Johnson. You're investing in Google, a company, and your prosperity depends on how the company does.
Okay. So people are really trying to time the market. Even people who don't know much, we hear about the V curve, the L curve, the U curve. Is it a good thing to time this, or is it a good thing in your expert opinion?
Absolutely not.
Okay.
I have over 32 years in the business. I've always believed rebalancing is the key, not market timing. Okay. So just to give you an example, let's say you're 50% bonds, 50% stocks.
Okay.
And because the market's gone down, your stocks have gone to 40%, whereas your bonds have gone to 60%. You should rebalance back to get it back in equilibrium. Okay. And you can do it at 5% variances or 10%. I often do it at 5% because that way you can catch a low. Similarly, if stocks have gone up and you become 55%, cut it back to 50%. And this may happen maybe twice a year for you. And that will prevent you from being too speculative or to being too conservative. And so that's something which has helped me. And similarly, within stocks, you've got large cap and small cap and international. Let's say, for example, within stocks, you have 60% in large cap and 20% in small to mid cap and 20% international. Deploy the same rule there. Okay. And rebalancing is a way of buying low and selling high. It's counterintuitive. Okay. But believe me, it works all the time. We rebalance literally on March 23rd and the week after the market was hitting lows. And today, believe it or not, the market is only down about 11%, the S&P.
Wow.
Just by staying the course. If you rebalance, you're probably only down 7 or 8%. So that's the logic which has worked in all types of markets, and which I hold dear. Market timing doesn't work because it assumes you've got perfect information, and nobody has perfect information. No. Sometimes you have to stay invested even if you feel pretty bad about it. That's how you're going to make money.
So you're not a fan of day traders anyway, right?
I think it works perhaps in the short term. But long term, most of my investors are long-term investors who are looking to build a lot of wealth over several market cycles. Right. And this has been an incredible bull market. Since 2009, markets have gone up over 250%.
Wow.
So yes, you did give back some, but this is not the end of the world. I think you want to stay invested, but you want to rotate among sectors. You want to make sure you're invested in the right sectors. Not every sector is going to be profitable.
Okay. Now, you said you've been in this world for 32 years in the financial markets. Have you ever seen anything like this before?
Yes, I have, Manju. Not the pandemic, but I've seen declines of 25 to 30% 4 times.
Okay.
Crash of 1987, we declined 28%.
Okay.
Saddam Hussein invades Kuwait in 1990. He doesn't tell anybody in advance. Market declines 29%.
Wow. Wow.
The Asian currency crisis, which saw a decline in 1998 of 28%. And the 2001 terrorist act, which caused a decline of about 30%.
Wow.
I did not include 2008 because that was a slow moving decline over 2 years.
Right.
But all these other declines happened very quickly, and also the recovery was fairly quick.
Okay.
And I think this time around it'll be something similar.
Okay.
That if people are very pessimistic these days,
Yes.
this is now, I think, one of the best times to invest if you have 5 years as your time horizon.
That brings me hope. We always hear that crisis is an opportunity. And I'll tell you, as a doctor, we have seen this huge opportunity in telehealth. And now we are doing video calls. And I think that is going to be a big change we are going to see in medicine. From your perspective in the financial markets, where do you think the most exciting growth is going to happen?
Terrific. Great question. So I think we are right now in the shutdown phase, and we'll gradually get to a limping economic recovery phase, with 20% and 30%. And eventually, perhaps in 2 years, it'll get back to 100%. But what is interesting is many of the trends we saw in the past 3 years have gotten accelerated. I was listening to an interview with Satya Nadella, and he said, what we thought would happen in 3 years is happening in 3 months.
Wow.
Telehealth, telecommuting, AI, robotics, automation. And we're realizing now that we're all incredibly productive, all of us in whatever fields we work with, and we're all working from home. So this is going to lead to a permanent change in behavior in many sectors. But unfortunately, there's some sectors of the economy where people have to gather together in restaurants or cruise ships and airlines and events, and that's going to take a hit. But they are going to reinvent themselves, and they'll find a new paradigm. Entertainment hasn't disappeared. It'll happen in new forms. And we'll all get together and socialize again, but it'll be a new paradigm. It'll be a new normal.
Your life must have changed so much because you travel so much. And now I guess you've been working from home as well, right?
I'll tell you, I've never worked harder than I have in the past 6 weeks. And it has been satisfying because to me, what is satisfying is calming a client, making sure they understand the framework, making sure they see it as being opportunistic, not being fearful. And in the markets longer term, you never want to be too optimistic or too pessimistic. You want to be opportunistic, and you want to allocate your money properly. And I'll tell you, out of this crisis, there will be plenty of opportunities to make money in a variety of sectors, and in distressed real estate, in private equity investing, in high yield bonds, in preferred stocks, not just in stocks, but also in bonds. And we saw this opportunity in 2008, and it's being presented to us again.
Okay. And sometimes the best things come out of the worst scenarios. You see that a lot in life too.
I think so. And in my mind, I think it's making people more spiritual. We all are realizing what's really important in life. It's not just your bank balance, but it's your family.
Absolutely.
It's your community, and it's how you feel. And people are turning to things like meditation. As you know, Manju, I'm a big meditator.
Yes.
And my friend Sanjeev Chopra, you've spoken to many times, is
Happiness Guru.
Happiness Guru. He's also an apostle for meditation.
Right.
And I think if people are looking inward, and it's making them better, in my opinion. And hopefully the world climate is getting better. I'm told people in Delhi are finally able to see a blue sky.
Yes.
In New Delhi, we haven't seen the sky being blue. It's always gray.
Yes.
And it's amazing. The Ganges has been purified.
Absolutely.
And Los Angeles is looking good. The smog has been cleared.
Yes.
So finally, I think people will realize maybe we should not go at 120 miles an hour.
Yes.
Maybe we should slow down. Maybe we should telecommute. And I think this will eventually lead to what we call the new frontier. And that's probably going to happen a year from now. But I think the key thing for investors is to be patient, not watch the market. In fact, I have CNBC on mute Don't touch the world news every minute, because it's, diseases don't happen in real time. It takes time for things to get better.
Absolutely.
And I just think things are getting better.
Yes.
It's incremental, it's getting better. And hopefully we reopen the economy in a measured, thoughtful manner, in stages, in shifts. And I feel there's a better tomorrow ahead, Manju.
You're always so positive. So my last question for you is, what is your message for the community?
My message for the community is friendship, association, and helping those in need is critical. I know we at AIF, the American Indian Foundation, had focused a lot on migrant workers in India. As you know, they're really suffering. But we also found we should do something for the local community in Boston.
Yes.
So we are distributing 20,000 meals to frontline healthcare workers,
That is
raising
amazing.
money.
Amazing.
And believe me, at the end of the day, it's how you make people feel.
Yes.
And I think all of us are doing our part, but talking to a neighbor who's not doing well, or talking to an elderly relative or a friend, they're touching someone and making them feel good is what we can do. And that's going to make a big difference, to people in their lives. So to me, that's my message.
Thank you so much. And we'll see you soon. Until then, keep drinking chai. It's good for you.
Absolutely, Manju.
Okay.
Take care.
Thank you so much
and thank you for having me.
Thank you.